Welcome back. Our next speaker is an investment specialist with an eye for the latest market trends and trading opportunities. Having been involved in financial markets his entire life and paper trading from the age of 13, he is the co-author of a book called The Complete Guide to FinTech and Investing and is a licensed portfolio manager in the European Union. His expertise are particularly strong in the field of cryptocurrencies, where he is known as one of the industry's top analysts. His market commentary is frequently quoted in financial news sites like Bloomberg, CNBC, Thomson Reuters, the Wall Street Journal, and many more. He will speak about COVID-19's impact on the markets and a few trading ideas. Please join me in welcoming Matty Greenspan. Matty, welcome, my friend.
Thanks a lot for that sparkling introduction. Appreciate it.
You're very welcome. The floor is yours, my friend.
So thank you very much for having me. As we know, the impact of COVID-19 has basically touched every aspect of our daily lives. Speaking to you, of course, day 34 of quarantine over here in Tel Aviv. As I'm sure most of you are also self-isolating, and of course, it's basically a nightmare on Earth. So, but there are a few bright spots and certainly many opportunities that we can discuss, and I'm certain that we're going to. So let's go ahead to the next slide, please. Basically, we think about the economy as a car, a very fancy car, driving along at 90 miles per hour. I think it's about 120 kilometers for those of you keeping track. And then all of a sudden, it's come screeching to a halt. Many industries, including bars and restaurants, theater, entertainment, sports, have been completely snuffed out during this time. It's never happened before in the history of the Earth. I think the word unprecedented comes to mind. If we have to describe this as anything, I think that would be it. It's basically unprecedented. We've never seen before in the history of the Earth that everything was going great, and then all of a sudden, in a single moment, everything came to a screeching halt. And that's basically what's happening over here. And some industries, of course, as we mentioned, have been beaten very badly. But of course, there have been some that have thrived as well. So I think that Zoom technologies, which we're using right now, has seen a massive uplift. And everybody's working from home now and visiting, video conferencing. Internet in general, telecommunications has gone through the roof. And I think the infrastructure of the internet is going to be, as a result, built up incredibly because of this. People require a lot more bandwidth because they're now working and doing these video conferences and everything like that. Amazon is actually back at all-time highs as far as their stock is concerned. Perfect V-shaped recovery for Amazon. They haven't even seen much of a hit. They're about to hire about 75,000 new employees. Obviously, we'll not get too much into the ethics of the matter because it is a bit murky the way that they've been able to carry on business where everybody else is forced to stop, and that they have their warehouse employees packing things that might not be completely essential, but are still being able to be sold through the website. So obviously their stock has gone through the roof because of it. As well, day trading. Basically, what we've seen so far this week is earnings season. So as of Monday, companies are starting to first report the effects of COVID-19. Is basically the earnings season is when companies report what happened during the last quarter, so January through March. And we know that March has not been, January and February might be fine, but March has not been very good for them. And the banks usually go first, and the banks have been doing terrible so far in what they've been reporting. But the ones that have been reporting some good numbers, those are coming through trading figures, through the volatility. People want to trade. People want to, they have opinions about the stocks or crude oil or Bitcoin. So they want to trade that. And of course, trading is something that can be done from home, trading applications online. The companies have a fairly easy way of transitioning. In this slide, we can see a few of the numbers and graphs. I think that the one thing that we need to focus on is unemployment. On the right-hand side here, you can see the New York Times front page from March 27th, which I believe is one front page that's going to go down in history, simply because the way they've laid out the front page with that yellow graph. You can see very clearly in the graph, these are the weekly unemployment statistics. So basically, how many people have filed for unemployment during that week. And you can see the 2008 bump in the middle on the bottom, which is in gray. And that's unemployment claims were exceeding about 500,000 per week during the financial crisis. And then on the right-hand side, we have that huge bar, which was the March 26th statement, which reported 3.3 million people lost their jobs in a single week. Now, just the week after that, that number doubled. So that huge bar on the right-hand side doubled to 6.6 million people claiming. And the week after that was another 6.6 million as well. So I believe that, and we're going to actually get the numbers for this past week in about a few hours from now. It's very likely that we could see another 6 million people, 5-6 million people without filing for unemployment here. On the top left graph, this is United States unemployment rate. And basically, we can see that over the last, we're actually coming out, like I said, the car was going at 90 miles per hour. Unemployment was at a 50-year low before this happened. And just on the right of that, you can see a little tiny spike, which is showing the first half of March. But even the second half of March hasn't really been calculated into this yet. So when these numbers come out for April, we're actually likely to see this spiking to an all-time high as far as this is concerned. So the previous high was around 10 to 12%. Some analysts are predicting that this could jump to about 20%. Where that's just the people who are officially eligible to claim to file for unemployment. Some estimates get to about 40% in the United States, real unemployment. And then you have the International Labor Association, the International Labor Organization on the bottom left in blue, who are projecting 195 million job losses across the globe. So pretty good numbers there as far as that's concerned. We can move to the next slide. So the initial impact of COVID-19 is, from the market's perspective, was everybody searching for liquidity and to get the most liquid asset they can. Liquidity basically means that an asset can be traded easily and freely. And the most liquid asset in the world right now is the US dollar. It's basically it's the international reserve currency, and all international trade is based on US dollars. And the surge in demand for the US dollar has been so incredibly high that the Federal Reserve Bank in the United States has been scrambling to keep up and provide enough dollars for everyone who wants them. If we think about the economy as something that basically expands over time, right? And we have the Federal Reserve and the other central banks, the European Central Bank, and everybody's trying to, they've been actually doing a very good job of expanding it. They've expanded it over the last 13 years, causing one of the longest expansion periods in history. And all of a sudden we see this huge contraction like that, right? Now, the question is, if we bounce back and continue expanding again, but a lot of people are saying that we could start, coming in and contracting further. Into this kind of a sustained bearish market. We're not sure what's going to happen yet, but the idea of the initial impact, that boom, is that all assets across the globe go down in value. That would be stocks, that would be bonds, property, automobiles, just about everything in in a crisis like this. We saw it in 2008, even including perceived safe havens like gold and silver, precious metals, and other commodities have gone down at a rapid rate. And what happens that when people are selling um, like that and value comes down, what they're selling into is basically cash, and can be either U.S. dollar in the West or Japanese yen in the East. It's the euro and British pound as well for the most part. But even those are coming down as well. The currencies also lose value. Kind of everything loses value together as the economy contracts. And basically, this is how market downturns work, and the initial impact, especially. So it might look like the dollar's going up in value, but actually, it's going down in value. It's just holding its value better than everything else. So when you look at it in relation to other things, that's the way that it's perceived. And that was just during the initial shock. I'll show you a graph of what that looks like in a few moments. But that's where we can. That's how we can see this drive towards liquidity. So the response has been tremendous. So there's two kinds of responses, and we're going to focus on the United States because it's the biggest economy by far. The top half of our slide here, we can see the response from the government, which is called fiscal policy. And the bottom half of our slide, if you can put the slide back up, is called monetary policy. So fiscal policy comes from the government. And we saw Donald Trump finally getting along with the Democrats in Congress to push through a $2.2 trillion spending package. We can see the US debt clock on the top left number has reached 24 trillion. And I believe that since I took this screenshot last night, it's gone up about another 100 billion. So we should be at 25 trillion, it seems, within the next week or two. And this is basically the government pushing money into the economy. And we're talking about new ideas like helicopter money finally being deployed. And possibly, depending on how long the rolling shutdowns last, we could be looking at universal basic income. The bottom half is the Fed. This is the central banks of the world, and every government has a central bank. They're basically independent of the government, and they are the ones who are in charge of the money. And if we look at the graph, it's basically, we can see that the response so far has been much greater than that of the 2008 financial crisis already, and we're just a few weeks in.
Hey, Maddie, I'm so sorry to cut you off, but we're running a little slow on time and just wanted to give you a quick time check. If you can wrap up in just a couple of moments, because we do actually have a couple of questions as well, really quick. Really Good. Sorry to jump in there, but yeah.
5 more minutes then?
2, sorry.
All right, yeah, let's do it.
Time goes
next
fast
slide.
when you're having fun. Sorry, my man.
Yeah, well, you told me 15, it's fine. Go on, next slide. All right, so what the governments are basically trying to do here, the government and the central bank, is to build a bridge, and building that bridge with currency so that we can go from one side of the bridge before the virus and hopefully get on to the other side. And we hope that that's what happens when the lockdowns are over, that money was able to sustain us, but then of course we'll be left with the mountain of debt. Next slide. As well, we're not going to touch into oil too much, but these two have been going at it, and this has added further pressure. Mohammed bin Salman of Saudi Arabia and Putin, who are two of the world's biggest oil producers. And then suddenly this, you wouldn't believe it, but Donald Trump was actually the one to to bury the hatchet between them. And suddenly now they're cutting production. They've actually struck a deal to make the biggest production cut in the world. However, because demand is so low, there's no airplanes flying, no cars driving, it's going to very likely be insufficient to stabilize the price of oil. So that's been a solid place of volatility as well. Next slide. So here's the chart that I promised you. This shows yellow is gold, which is actually the only asset. You can see the downturn, which in the initial impact, if you look at just where everything started falling, gold fell as well. The green line is the US dollar. You can see that initial surge of dollars around the middle of the chart, but now it's leveled off. So this is just from the beginning of the crisis until today. The white line is silver, and the blue line is the stock market. And I'm actually quite impressed on how basically they say that in the financial crisis, all correlations go to one. And we'll talk about that on the next slide. But I think silver and the stock market has been basically this around the same. Bitcoin is in orange, of course, and we've seen that take a major hit near the end of March with the rest of the assets, and crude oil in purple has been the worst performing assets in crude oils because they're not having a good time right now. Next slide. What about cryptocurrencies? So actually, the cryptocurrencies are just along for the ride. They're basically just getting swept up in everything, and we can see that they have the highest correlation in history. Yes.
Thank you so very much for the presentation. I'm really a little bit upset that you can't complete it because this is right up my alley. I know that there's so many people watching that are really interested. I don't know if we can set up like an AMA because we have a ton of questions, but we do need to move on. We do have our next speaker waiting. I don't know if we can arrange it, but I would love to try to make that happen for everybody.
Yeah, don't worry. No, don't worry about it, man. Anybody who's interested in this kind of stuff, come sign up for my daily newsletter. I'm putting out these trading ideas on a daily basis. Come follow me on Twitter. You can see it there as well. I'll be very happy to answer any questions that you guys have on a one-to-one basis.
Rock and roll. Thank you so very much for your time. Very interesting presentation. Sorry we didn't get through the whole thing. Thanks so much. We'll
Thank
see you again.
All the best.
All right, guys, we're going to take a very, very short break, and then we're back with a fireside chat that you cannot miss. So make sure you are still tuned in after the break. Thanks so much.